Crypto Sniper in the house with you in the room. Yes, indeed, indeed, indeed. What a day, what a week. Aren't they all fighting in the kindergarten? Yeah, yeah, yeah. Oh, no, elongated muskiness and the Bitcoin maxis and everybody having a little scratch at the eyes. Yes, it's kitty cat season. Get the milk out. I'm here with the Crypto Sniper, and here I'm going to tell you all about what I expect short term to come out, what some of the risks are with regards to Bitcoin, Ethereum, and other tokens of great interest. Of course, we'll touch Ripple, and we may do one or two others as well. But before, remember, also have some other money. 1 kilogram's good. To the side, we'll be doing some Market Sniper. We believe, it's like a mobile phone, man, trying to bling it. Hello, hello. My battery's flat. We believe it's Elon. It's a Tesla phone. We believe that silver is also in a very good structure to go upside. Stay and go and subscribe at the Market Sniper channel as well. YouTube, you'll hear all about that. But this is the crypto channel. We're here to tell you all about it. By the way, that bar, 1 kilo, you can get coins, you can get gold from Pure Gold in the link below. If you want to do that, have some of everything, guys. Not a great horse, not the fastest horse, a stable of horses, so that you have some offline money as well. For those of you who are helping make rich, crypto rich, you can sometimes be crypto rich and real world poor. It's good to have something physical. That's why we do it. So what happened? All the bun fighting and the FUD on Bitcoin. We're going to take a look at the Bitcoin chart. I can tell you why I think actually we're going to get a short-term rally, how far it might go, and what structures and threats are out there. During that period, if we are correct about it getting a bit of a rally, because it didn't have super momentum on the downside, there is bid buying at that moment. Does it mean all bear risks are off? No. What could the bear risks, how could they reform and show themselves? So you get, it's kind of like a monster that's in one of the cupboards, and you open the cupboards and there's all your stuff and it's fine, and you get dressed, and then you open the cupboard and then whoop, out comes the monster's head, and suddenly it's fear and loathing. We're in that season again. Long run, super macro bull, but there is a couple of possibilities and threats on the Bitcoin. So where do we position on that? We'll have a look at Ethereum, how it's doing as well relative to that. And I'll take you past something that we gave you for free last time, that our premium community is also involved in, and that is in the major tokens, Ripple. So we'll talk about that. Let's go have a little look at the charts and discuss. So here we go. Bitcoin, I am putting it on the perp. We are trading with FTX a lot now. We like it. You get a lot of the tokens available there. Again, if you don't have an FTX account, link below. Just grab it and hit it, and you will be getting on in a very nice fashion. You get liquidity out of derived markets, remember. So a small explanation before we go too heavy into the Bitcoin chart. Some people need to understand this conceptually. When you trade on the exchange, you are actually buying actual Bitcoin, Ethereum, Ripple, etc., and then you hold it and you deposit it in a wallet. What tends to happen is, the minute you start trading with some size, is you might not get always the fulfillment. You get part filled or some of it. This was really bad for me personally, not because I'm a whale and a big hero. Post 2017 highs at the bottom of the bear market, there just was no liquidity in exchanges. Everybody was blown up. I felt like a whale, even though I wasn't particularly a whale. Try sell even a single Bitcoin, and you'd get nibbled a little bit, then you'd have to move the market, and without rushing it and trying to smash the stack. You should never smash the stack. That's what FOMO buyers do, panic buyers and panic sellers. Whenever you recognize that you just have to be out, you're probably in a highly drugged state mentally right now, and you've allowed yourself to be in a position where you're now probably going to end up selling the low because you're spilling with all the sheep. You're stampeding across the railway line with all the sheep. Avoid being a sheep. Use limit orders. Be ahead of the game and using limit orders. Get in certain scale, certain loyalty. For example, on the FTX, if you stake a bit of FTX, and you don't have to have a huge amount, and you can stake a little bit, and you put, and you also hold some of it, you get discounts and you even get paid for making market. In other words, not being one of the panic buyers and sellers sitting in the bid stack. And if you are planning your trades more, guys, if you plan your trades, You should be looking forward and what you think is coming next. So you choose extra good entries. We'll be talking about that with the tokens we're going to be discussing today, namely Bitcoin, Ethereum, and XRP. How you could have been using that and how we have been using that in our community and discussing orders that were filled with this little sell-off that we had, but a weakness on BTC and how it helped fills on the XRP trade. So we're going to come to that. So the whole point is, don't be panic buying. You shouldn't be using market orders. Every time you're using market orders, you're admitting to a failure. You're admitting to being in a state of failure. You've got to recognize that. Even if you're putting your limit orders very close to the bid and the ask stack, you're developing the ladder and you pay less. These costs add up. I told you I did a traditional trading market assessment just on one particular account. And I'd paid £183,000 in transaction and holding costs on just the trading activity. You know what that takes out of a P&L for a year? And it's a huge sum. Yes, I was in the Turkish lira, but even eliminating a very high cost one, which we were long, it was over 90,000. So think about that in your crypto realm, all these little things. It compounds against you. If you are in the habit of trading like market panic, hit the stack all the time. Okay, you become a better trader when you take on the challenge of being a little bit ahead of what you think next and in not emotionally reacting to buying the stack. So what happened on Bitcoin? Let's get to the points. There are a couple of scenarios. So it's been curious. There is a risk scenario, so let's cover the bear scenario, and I'll give you the bull as well in the short-term bull. So I'm going to give you a short-term. You have to understand time frame. If somebody comes up to you and says, what do you think is going to happen on XRP? The question is, on what time frame? On what time frame are you speaking? 5 years from now? In the next hour, day and a half? 5 minutes? It's a big, big question, and it has totally different answers to it. So let's talk about the original risk that we discussed was maybe you had a 47.5 neckline and you had what we call a complex hedge. You can see these puffing out rising wedges whereby the dip buyers are getting punished and eventually they surrender at that point. You have a spiller, a thriller, you have a little wind up and another spiller, and you make a target down there. Then you get a rally, you get a new wedge over there, you get yourself another spiller. So there's too many dip buyers that are slowly getting exhausted by a lot of wave of, let's have the TG Pink. Did you notice the TG Pink today, guys? The TG Pink sellers, elongated muskiness, trying to shore up the earnings on his battery iPad car thingy that's not making any money, doing a little bit of pump and dump on the side there to side hustle his his earnings report. He's now a hedge fund more than he is a car maker. Anyway, ignore that. That's just for fun and entertainment, chaps. Ignore that. It was in the charts. I don't care who's having a cat fight or not. It's in the charts. We're here to make money. We're here to buy the things that are going to go up more than other things. That's why we're here. So seller off. So you could have had left shoulder there with our that was the one of the risks, a big head. So that would be your kind of grinding rising wedge head, and that could have been, for example, a right shoulder, which would have meant that was a trigger on your neckline, on this neckline. I am not oversold on this structure. I'm telling you, it's out there and it has a percentage allocation. I was describing to the premium community today that it's almost like you're in your little Fiat going round the Champs-Élysées road with the Arc de Triomphe in the middle there, and you've got lots of spoke out roads that you're going to turn off. Are you going to bomb it south, or are you going to go north or southeast or northeast, etc.? There's a couple of options. There's a big decision tree process going on. Long-term macro bias bull. That doesn't change. That doesn't change. But there is always possibilities of a fairly sizable correction in the process, and I don't think it necessarily immediately emulates previous years. That said, I don't think this was an extreme threat. Typically, when you run a neckline in a head and shoulder, there should be some serious momentum. There was initially, and then I will show you two on the 8 hour. So that's a double of a 4 hour session. Two quite strong hammers, which is why I suggest that we're getting a bit of support, a bit of that dip buying support. Let's go back to blue. Maybe we should. little boy, baby, Pippi Blue there, coming up and buying up wicks, which means we're not straight away into the spiller. This would probably, it could return up to this neckline, and if it got really violent second time, it's a possibility. Not quite feeling that. Not quite feeling that. There was real momentum here. Over here, this is a little bit dissipating. It's kind of more grinding off marginally lower lows. That usually points to a little bit of bid support coming in, and we'll show you those hammers in a second. So I don't overweight that. By the way, we're also following, I will counteract our position with regards to, I think it's Raoul was posting some interesting stuff from Real Vision, worth a follow if you're not already doing them. Let me just see if I can find that. What was he saying? Here he was. That was his tweet. We'll come back to that. Let me just get it in the middle of the screen. Whoop, whoop. So his take, we'll come back to that one in a second. Let's finish making our case, because there's quite a bit of interest that interesting things he has said in there, but he's kind of caught up with where we are. We were highlighting the fact that there is scope for, let's talk about something a bit more bullish. There's scope that there's been marginally lower lows showing real support. So we'll go back to blue in support. We can even, why don't we use a green? And we can show, okay, bit buying in there, buying in there, buying in there. Quite a bit of buying in there, bit of drift buying in there, quite a lot of buying needed there. Going back up, pushing it into the next wedge. Again, buying here. And then these two. These two I'm going to show you with a square and just show you each one at a time and then highlight them both. So if we take the square, give it to me square. Yep. If you look at just that single hammer in the wick, you've had quite a harsh dip down and then it brought back up 2/3 of the way back. Great. And then what did it do the second time? Another test down. Has made a low, but then it's probably brought 3/4 of the way back up. In other words, that which you see in there. It's not, I'll zoom in a little bit and give you a bit more, but we need to stay on this wedge in a bit. So that's your 2 8-hour hammers, both of which pushing down and getting at least a 2/3 and then later a 3/4 buyback. And now the current candle that we're on, let's have a look. That one over there, not very volatile, volatility dissipating. So you stabs down, bounce up, stab again, bounce back up. Oh, almost broke those knuckles. And then now you're just spinning. And you're just sitting there, and now you're drifting and you're wondering what to do. Those two attacks never worked. You got pushed back on both those occasions, and now you're going lower volatility. Now, it started at 11, and the time here is 16:15 on that candle. So it's already had 11 to 16. It's at about 5 hours of the 8 hours. So we're on an 8 hourly. Remember, that's that number up there. Whoops, we lost the draw tool. It's that one. So it's a little bit non-standard. It's a double of a 4-hour session. So what actually is this? Well, we resisted there quite a bit, and we supported along there. So we're saying, okay, there's a falling wedge, but that doesn't mean you're safe. What it does mean is you could get some bid support and move it across to the other side. We teach you about the 3 outcomes, the type 1, 2, and 3 wedges. If you want to learn more about that, you want to become a specialist price behavior wealth builder in reset times, you need to go down, look at the link below that says click here, go to the Market Sniper and book a call. That is where you can have a chance to chat to someone else like you. We've had an amazing run of people coming on. We have warned you that we're doing an incredible quality of content, and we're going to do a 3 structured new product, and pricing will all be changing. So, and we're launching a new platform. We really want an awesome environment for people to interact. So that is here and arriving. It's not released yet, so there's still a small amount of time, but don't leave it too long. Anyway, so the point of that being is just because you have a falling wedge doesn't mean you have a bottom. You can go across to the other side and then spill it back down, and you can have a type 3 wedge that actually breaks down. And those head and shoulder threats then come into their own, possibly. So there's a short-term bullish. I'd expect to see some movement up, but it doesn't mean you're out of the forest. There's another angle to that. So we're talking about scenarios. So this is the tricky part. That's why I say you're on the Champs-Élysées. There's many roads. You're asking me which way do I go, as if it's just a single fork in the road, left or right. No, unfortunately, you are on the circle and there are many possible turn-offs and outcomes. This is why it's dangerous. So what have I personally done? I'm actually playing it quite safe. I've had a great run. I've capitalized all my gains. This is a little bit of psychology for you guys to think of. When you've had a good run, capitalize your gains, get square and accept your new capital base. You took risk. You utilized leverage. You paid costs on trading. You did a variety of things. It isn't house money. Get out of casino effect. If you've had a run, you felt it was going to be bullish, you took some of these trades, get square, capitalize it, forget everything you've done. Well done, 5 stars. You finished that school year, you're in a new school year, and this is your capital base. Do you understand that? Bookending something, milestoning, and saying, right, now I start with. And now clean eyes and go again. And now don't surrender any of your capital, because it's capital, it's not house money. And that is known as the casino effect. It's really psychological and you need to watch for that. So do that. It's really valuable. And while there's this question mark, it's a nice logical time for some. So let's take it and draw another neckline. There's another scenario that could exist for the head and shoulder. I've shown you one head and shoulder with the 47,500. What about another possible risk? So I've made that 47,500 really low. And I'm coming down to you and I'm saying, but look here, we actually had a 44 run. And in fact, we can take nearest round logical number that was well made by both. We teach you about complexity in head and shoulders. We've just done our advanced head and shoulders, hybrid head and shoulders. Now, what does that mean? Well, one little example for you is that this is a more complete shoulder. And that is your armpit 1. In other words, the final touch of the neckline before you started your journey up to the head. And this is all head. And you have just made what we refer to as armpit 2. Again at the neckline, where that neckline is 43,000. 43,000. What you might then have is you could get your right shoulder, puts right hand up, thinking a while there before he gets dyslexic, autistic, goes, grab that and pop. And you get across to the other side of the wedge. You fail to even run the left shoulder's high. You get here and then you come down pretty hard and then you're there. That might spill with more conviction than the draw with the neckline here and what we've just had. So the first version of the head and shoulders is not gone, but it's not lit up. What has transpired has not overly validated it. And if you get a rally now and you go through that neckline, that was the 47.5, I think it's largely a scenario that is bypassed. Still got a 15% risk, but it's largely a scenario that's bypassed. However, get up to here and sell off really hard. That could again be an entry for the short side. Who knows what FUD is going to come? By the way, on that very point, the inflationists have been gaining ground. Over a year ago, we said inflation is coming, the debt market has topped on a chart. We said first inverted. Shortly after the COVID-19 and all the huge blow-off spikes, dumps on the debt market. This is a little bit of traditional markets, but it matters. Why am I mentioning it? Because recently, in the last 3 months, we've had a whole spate of big name people, including Michael Burry of The Big Short, come out as an inflationist, and then the Fed has kind of had him close his Twitter account. Funny they don't close elongated Muskiness's Twitter account. He's been calling inflation. You had Stanley Druckenmiller. These are big giants of the hedge fund industry who've managed huge amounts of money and made great and successful trades. And now you're starting to get more of the rats and mice that are influencers around them, all echoing the same sentiment. It's about time the inflationists, and I'm one, but I'm already a year and a quarter into my call, get a little bit of pushback. So we could have fear and deflationary forces. What does that mean? The economy constricts, everyone buys less, everybody's losing money, a little bit tied, the stock market crashes, wealth effect is reduced, etc. In other words, destruction of value, which is mainly in hyperinflated asset bubbles. So you could get that, and there is a macro environment where we could have a tough summer. And you've got your Indian variant and all of these things. I don't want to get too far down that rabbit hole. That could see this turn into a key event right here, where you could have your left shoulder and the pink head here, TG pink head and a right shoulder. And you could be then breaking from the 43K now. Now that is super big FUD and bedlam, because if it were to happen, we're at a 65 there, and that's a 43. You guys can run the maths, but that is 23,000 off a 43. 23-ish off a 43 would be a substantial spill to 20K. That is not my call. I'm just saying there is a scenario of all the Champs-Élysées spoke roads out. There's one that goes hard south, and that one is a 20K outcome. But you'd need quite a few things to still materialize for that to happen. But a rally up to here, given this falling wedge structure, looks possible. It's what happens next. It's what happens next that will matter. So we'll be monitoring that situation, but it is a risky one. But let's play the increase or the rally. It might not be even that strongly up. It could be quite limp of Bitcoin. What do we do until then, until we get more clarity? So now you've seen the two kind of bearish scenarios. Let's go back to something more bullish. Well, we got 3 impulse falling wedge. So how do we draw for that? Well, we talk about that as your impulse 1, and we'll say 2 is currently complete. So whatever comes next will be the 3rd possible impulse. Now the problem is that's going to dovetail and coincide with multiple possibilities of pattern behavior, including keeping that nasty macro head and shoulder with the 43 neckline still in the game, because whatever you get as a 3 impulse here should be lower volatility. We've had absolute spiller thrillers going on here. We need this, the Bitcoin market needs to calm the heck down, and it should or would, but that doesn't mean it's going to be super strong to the upside. It can be flatter and oval, and that could set up also the right shoulder for the previous scenario I spoke, but it could also be a falling wedge that you get a nice breakout of, the capping descending grind line. One of the things you'll learn why we break down right the way down subsets of patterns to the atomic level, because sometimes you get a capping descending grind line without all the support perfectly done like you have here for this falling wedge. You need to know any amount of information in price behavior. We are the place where you get your doctorate on price behavior. And it gives you a much better probability game for building wealth in these crazy, insane times. Grab the link below, book a call. Okay, so that's Bitcoin. So a couple of scenarios. Now, where Raoul's actually had spoken a couple of things that were interesting. It's nice to contrast sometimes. And he's spotted that falling wedge. He's not drawn any of the other wedges. So his TA, he generally has a couple of lines on it, not overly detailed. He has spotted a falling wedge in there. It's the same draw essentially than what we have. But what he's saying from that, let's go have a look. Whoop, whoop, whoop. Made it a bit big there. What he's saying from that is that he thinks Ethereum is stronger. We agree. In fact, we've said Ethereum is stronger prior to that, and we think there's even stronger options than Ethereum itself. So he's brought in Ethereum. We'll go into our Ethereum analysis now, and we'll contrast that, but it's quite similar. We're seeing very clear support. He's showing us a lot of the history before. He should just focus on the wedge, but he's not overly chart focused. But expect F to lead the way, and that's the bit I disagree with. Most of what he says is pretty spot on, but it is Bitcoin that is your God market. The only difference is if Bitcoin is not going down hard and is tinkering about and just holding its own and pootling, expect Ethereum to overperform. Yes, higher beta, better performance relatively, assuming a non-selling market. However, if Bitcoin decides it's a selling market, Ethereum will go down. Ethereum will go down. And in time, potentially, if Bitcoin has a severe selling market, Ethereum can catch up as well. It can go higher beta even to the downside. So it can relatively overperform for a while and go down. The chart that decides is Bitcoin. The chart is not Ethereum. That might not mean, maybe he didn't mean it like that, I don't know. But I just contrast that difference. So let's go give you our take on Ethereum, and let's go fully onto that. So you've had a bigger spill in some senses, and I think percentage-wise this highlights the time frame and the beta effect of Ethereum. Let's go, in fact, Ethereum, I'm going to just do the 4 hour. No, let's stay on 8. Let's just do it bigger. So you can see our falling wedge here. Whoop. Yeah, use the mouse. So you can see that's an even more intense hammer, but it's very clear, and we saw this even at the prior low, that there is hammer buying. There. Big hammer. We had quite a testing dip there. We went higher. We had more testing dips, buying. And then you had one hammer there. This is a mega hammer. That is a mega hammer on its own. This thing is a super spike hammer. At that low, you're just above 3,100. The top of the hammer is almost 3,600. That's virtually a $500 hammer on Ethereum. So you can see when it's a spiller, it's a thriller. And that's a higher beta version. It's a higher beta version. So yes, it wants to do better. Yes, it wants to do better. If Bitcoin allows the market to go up, Ethereum will overperform it in our view. If Bitcoin is looking shifty and searching for the trapdoor, you could in fact lose more money by being in Ethereum. Hence why all collateral are gone square. I would like to take a mid bull market rest. Yes, I'll be putting it back in, and now I trade derivative markets, because we started that explanation and I never really finished it. Why I'm using FTX as well, with the link below for you to open your own account. Greater liquidity in the derivative market. It's kind of like a cleaner, fairer version of BitMEX, who are now currently under survey, better platform. And you have all your collateral, and it can be in dollars, it can be in Ethereum, it can be Bitcoin, it can be whatever you hold, including FTX, their staking token. You get, you stake a bit and you hold a bit of the FTX token, which has done pretty well. You get discounts. So, and then you go market make, not hit the stack. And now you're becoming that better trader. Now, I know many of you know this, but how often are you actually doing this? And the perp, if you're trading Ethereum, is not actually buying Ethereum. You just get paid the fiat equivalent of profits. Now, you can go buy with that profit Ethereum if you want to hold it. You can go buy any other token, Bitcoin, etc. But you will make dollar-based profits on that. But the liquidity is far higher. And it's fast. So that's what I like. But remember, it is a derived market on Ethereum. You're not buying Ethereum if you ever choose to use that. So be careful. So the charts can vary slightly. So that's the ETH-perp chart. It's not the ETH-USD. If you look at that extreme low, it could be $1 or $2 lower. It could be $20 lower. Or it could be not as deep, depending on whether someone on the exchange absolutely lost his cool and dumped everything. You don't know. But generally, you might get a little bit more vol on the derived market. So watch that. So anyway, so that explanation finished. This is a huge, huge hammer. But you're going to test again, it looks like. And that's because of Bitcoin. That's because of Bitcoin not fully recovering. So Bitcoin is the boss. If you're looking at Bitcoin, he's 44725 right now. He's in the 44s. He was 65, remember. It's already had a pretty good fall. So this could test up, down again, and then rally up again. And you could still, even though everyone wants to be a buyer, you had hammers there, for example, you could still do a type 3 spill. And that's if Bitcoin does the type 3 spill. It will spill. That means you will have had hammers and you will run those hammer lows. That was a great hammer. Guess what? If you had a stop there, you would have been stopped out and it would have gone well past on the next hammer. Yes, it rallied, but it can do that again and just have a spill. So don't assume. That said, Bitcoin looks like it should do a little bit of recovery. But it's doing it slowly and half-assed. It's a walkout. It's looking a bit tired. You can't rule out that big head and shoulders. So that is it. That is Ripple. My apologies, Ethereum. And we're going to go have a look at Ripple and see how it's holding up. So last time when we were sharing to you guys, we covered Ripple and said, if Bitcoin plays the game, this one could be a star for you. So we go back up. We're still on the 8 hours. These are nice, fairly chunky time frames, by the way. I like structure on chunky time frames. Structure on chunky time frames is less prone to a little bit of skittishness ruining your structure. If it survived over an extended period, when did this first high happen? It was some time ago. We can get a date and time. We're at 1977. So this cycle of the bull market, 14th April, some time ago, 11 o'clock. We are now 17th. It traded 19 all the 7. So this cycle, we haven't seen Ripple on the other side of $2. It's a big key level of significance. In fact, it should be sitting on here like a big boss. And I think this is, if Bitcoin allows, remember, every alt, including the big alts, are all contingent on Bitcoin. That's where I differed from what Raoul will say. You will need Bitcoin to not die. We did see 1 or 2 tokens having somewhat of a performance irrespective for a short while versus Bitcoin when there was big news for them. For example, ADA did quite well in spite of Bitcoin doing bad, but it still sold off little bits when Bitcoin sold off a lot and then spiked when Bitcoin stopped selling off. So there's still a correlation. It's your boss and your God market. I'll keep hammering that home. And it hasn't changed, even though its dominance, overall dominance in the market is dropping. And we can take a look. So this overall looks like a macro structure to get you north of the 2s. That's what we're showing. We did a volume by price analysis, and I explained the concept of cleavage with some degree of entertainment for, hopefully anyway, for the members. If you want to know more about that, you can. But what it serves as a validation role in terms of patterns. So this is holding up okay. This is holding up okay. Again, look, these 2 hammers. There and there. There's your 3 and your low 3. And we would see 2.6 run. 2.58s, 259s, 2.6s. So there you go. You've got a trade and you've got an idea. You can take that one and see it. What's our big if? When you're trading alts and Bitcoin is in a very iffy state, it's reliant on Bitcoin doing that rally. It could be a shoulder for a head and shoulder. It could be crossing the falling wedge side. It could be both. And this would need to get away. If Bitcoin starts to lose its shit at any point, this is a shoot and scoot trade. We will not stand and let it beat up and spoil structures. You will just kill it and take it off. If we see Bitcoin goes towards the head and shoulder or does an impulsive plunge through that $43,000 neckline that we were saying is the even more extended head and shoulder option. If it does that, we would not do it. The one thing that's not quite right for me is my COT indicator is quite tight. The biggest 4 sellers are quite low and quite close to the biggest 4 buyers. That's a constriction, and normally that's a bull setup. We haven't seen big spills on tightness between the big 4 insiders and on the buy side and the sell side. So that's why I say not overly, you know, buying the super bear scenario. There's a number of things that's just not marrying up right. So that's why I will consider to take this trade. If things get disorderly on chart A, I will get out of chart B. Understand the truck and trailer aspect of this. You're not only driving the truck, you're pulling the trailer too. And the trailer can dictate, or should be the truck that dictates, you're in the trailer. So you've got to recognize that Bitcoin is, at the end of the day, the engine for the crypto markets in terms of God reflex. So this fight with Elon, if it is the FUD that is doing it, and I saw this tiredness in Bitcoin before. You know, we did that video before any of this happened that said, guys, it's looking tired. Guys, it's looking tired. And we'd been discussing it a few days before in our community before I did a free view on that. It's looking tired. It could have a drop. And more people took defense and didn't get killed because of that. And you could have been one of them. It's not what you make, it's what you keep. So don't forget your silver. Let's have a little look at some questions that you guys got me. Mr. Clean, yes, I've heard about that one, apparently. It's an American advert. Mr. Proper, if you live in the USA, try an exchange called ICS, localcoinswap.com. Yeah, go and do that. Yeah, so this, someone asking about the metal. So this is delivery to your door, by the way. Coins, bars, gold as well. And nicely packaged. And it's the most competitive price I've got. And I've traded off a lot. I've used Atkinson's in the UK. I've used Silver to Go. I've used even Celtic Gold. This is my best value. And physically to your door, everything's always arrived. Everything's there. And high trust. So there's no concerns. Legit guys for delivery. XLM, someone says XLM's been really strong. When you're talking about Ripple positively, some people say you should look at XLM. You know, it's not a direct association, but we can do a pass by XLM, but I think it's been too strong and it's just running, and it's got to invite you in, guys. You need to realize the market needs to invite you in. This is an invitation that we're seeing on Ripple. XLM is just high and going higher. You don't chase an assegai going up. You're just going to be a bag holder. You're going to be a doggy fool. You know, don't be a doggy fool. Even if I think doggy will go up, make sure you take an invitation to get in. A setup, a structure. Let's find XLM and I'll get it. Just searching. Here we go. Yeah. Yeah, so Solano and Kasama, and I've had from my voices saying that DOT will start to do good again soon. They're selling 100 projects, etc., etc. There's fundamentals. Others have their fundamentals for July and August going to be good news flow. They're already on a test net. So yeah, so XLM pretty firm. I can't chase that. I can't chase that with Bitcoin at risk. And this is a reasonable time frame. It has to look at a reasonable time frame attractive. You can't get in that. Plus there's some big selling wicks here and here, but there were also big buying wicks too. But it's kind of no. So it's getting broader. But well done if you were in it from before. If you got in on a falling wedge like over here, you know, nice job. Nice job. Little bit marginally higher highs now. It wouldn't seduce me. But if you're already in it and you're good you're properly in the green, you may as well enjoy your ride. Make sure you have your take profit level. But I've kind of looked at this chart. It's not one for us at the moment. By the way, when you look at XRP, going back to which is the one we're talking about at the moment, XRP versus Bitcoin. Remember, of course, there's news as well with XRP. And I have a feeling it's not going to be bad for them. You can also should compare it to the other tokens to see where your relative strength is. We can use Binance there. And that's XLM. I didn't mean to do that. Done well against Bitcoin. Actually, that might have been where you could have found your pattern, by the way. This is almost a fluke. This is your pattern for XLM. Where's our XLM boy? A little bit spoiled. That's marginally lower there. I see it. It's a pity that. It's a little bit spoiled, but you might have had. It's been slightly spoiled for us there, but you might have had that. So you could have projected that. You might have a bit more to go, but that's an imperfection. That's your final low here. So it kind of takes this out of the equation for us. But you might have gone from there, and you could have claimed those as your 3, and you could have rubbed those out. And whoops, rubber. So you could do that. It was still in a downtrend here. You see, you made a lower low. That would be called bridging the trend. That's the end of your bear trend. Even though you spiked here, you went lower. So it's Dow theory, lower highs, lower lows. So you learned something there. We got a turn. So you need a period of where you're not making lower lows. That's not a lower low to that, and that's not a lower low to that, just. So you get to trade that one, and you get a move up. So it would be around there. So you might have just made targets. Funny enough, I didn't mean to actually get in XLM BTC, but that would have been a better structure than what you are seeing on the dollar. Remember to look at your charts across the Bitcoin. Build Bitcoin value. It's still your God market, even though you might be in fiats right now just to protect yourself against the slight chance of offsides and offs for Bitcoin. But I'll just show you this. This is a very positive structure for XRP against Bitcoin. It's not a perfect HVF, but it is an ascending structure very similar to one. Just slightly spoilt it with that relative to that. I think it's a touch higher. Key inflection point in there. You'll learn about key inflection point theory. I've got to do the slides for that, but that is strong. That is going up. A little bit of pushback there now on that particular wick. We'll see, but I think that's going up. So I actually have a little bit of XRP bull, which I will close very, very quickly because these leverage tokens go down bad if a Bitcoin starts to throw down. So we're watching it. My assumption is Bitcoin just has to not go heavily down. It can drift off a little bit and then climb slowly. If that's all it does, we could be okay to get away. But the minute it starts to roll, you've got to be off. So it's quite a tricky, nuanced trading situation, guys. So because of Bitcoin, and I want to warn you about this, because the minute Bitcoin bins it, and it can suddenly bin it, and that head and shoulder can suddenly come on, the macro one, it's all things off. So my collateral is remaining in fiat, and I can close a leverage trade super quick on a highly liquid market. And if I have to eat some red, I'll eat it. So it's risky out there. There's a little bit of risk out there because your God market is not playing the game. So remember to look at your charts across tokens. Get 360-degree view. Look at it against Ethereum. Because Ethereum, we say, I think, will, assuming Bitcoin mildly recovers or goes sideways and doesn't throw it down, Ethereum will recover better. Again, you can have a look at XRP against ETH. You can see long, we've had a sustained coming off whilst ETH had its super run. But prior to that, XRP was first. It's funny that because it was the same in 17. And then you made a floor. First impulse. Second impulse there. And now you made a floor. That's your third. A little bit of W bottom. 1, 2, 3, and off you go. So this can bump. So that's why I'm biased XRP. You're seeing it against even tokens that have been really strong. Ethereum and majors. Pirate Chain, IRRR and Monero. These are going to come into light. They are going to come into light soon. I am hoping good things for them. But for the coin go up stage at the moment, they're still not the super performers. And that's quite a hard selling off at the moment. Again, lots of things that could be in channels or wedges. But it's still a bit early, I think, for Monero. Still a bit early. That was your key inflection. Quick blow off, and then you didn't get any more. Bitcoin stopped playing the game. Someone likes other, wants to put a lot of kissy lips. Great structure for LRC. Is alpha still in play? It kind of is, but it's been a bit, it's had its mojo a bit kicked into it. It's not invalidated. Alpha is not out of play. It's not invalidated, but it's been up and down, and it's been a bit chopped about. You see that? Also, 2 hammers. If Bitcoin does its bit, it could get back into rhythm. 2 hammers. But every time it was about to make some serious progress, Bitcoin wet the bed. So it's had its life messed around. It's about to go out for a proper party, and then, you know, the phone always rings, and it's Bitcoin asking to borrow money. You know, so it's spoilt its chance to get away. So it needs the Bitcoin rally. It's not going to perform on its own. Without it's got a setup, it's got a structure, it's got time, plenty of time. It only officially triggered at this point for us. It's got plenty of time. It's quite a big setup. So it's still valid. It's still valid. It's just battling. And it's battling because the point I make, you need the God market not to battle. Drinking regular little sips of water takes any viral aspects that could be in your mouth into your stomach acid and kills them. Especially if you feel a tickle in your throat. Elon cannot be stupid enough to trigger this all and it be negative. Yeah, I think Elon is... Guys, they're giving you a drama tale to follow in. The charts are where the money's made. I don't think for a minute, I don't spend my time speculating on what Elon might do next. I look at the chart and see what it's telling me. If Bitcoin holds, there are a couple of things that we're in that can work. I'm in Alpha, I'm in XRP. That's it. Those are the only 2 trades at the moment. And collateral-wise, because of that outlier risk, I don't want to be a seller in an absolute spiller that could go down to 20K. Even if it's a 5% chance. I'm not giving it high percent chance. But I don't want to have 7-digit sums that I've got to dump that are losing hundreds of thousands in worth to panic sell. That's just that's a recipe for a super shit day. Do you know what I mean? That's a recipe for a super shit day. You know, so don't do it to yourself. So whatever you've got, and it's the same if you've got $5,000 and you're trading hundreds here and a couple of grand there. You don't want to have to sell out of 5 grand's worth of stuff in a spilling day. It's easier to do, but it's still at market. You know, I don't sell at market, but if it's an absolute spiller and you're caught in the wrong and you have to be one of the sheep and you've got a downside target of 20K, it could happen. Do I think it's really going to happen? I find it hard to believe, but they could create a lot of FUD. Who knows? Who knows what the Fed came out with lots of iffy statements on Bitcoin just prior to Elon. It all seems a bit manufactured. You know what I think about control structures? By the way, Reset Sniper channel, now on library. We'll put it on there. Anything we say is getting banned nowadays when we have part 2 that's allowed and part 1 that's not and various other things. It's called Odyssey where you will interact it, but you will need to. We're doing it on a 0 cost basis. We are charged because it's decentralized video, library tokens. So to watch it, you'll pay a couple of library tokens. It's never more than $3. And you will get exactly what I think about all of these things. And it's synchronized. You know, the Fed didn't just suddenly say dicey things. Other people didn't suddenly pop up and say, hey, Bitcoin futures are risky. And then Elon just happened to afterwards say what shitty people maxis are. There's a game going on. They're managing this asset through the heroes they have created for you. And they are captured Judas goats. That's my opinion. Judas goat. Not the kind of goat that you want to be. Legacy markets haven't even pushed us down yet. Yeah, so Odyssey is great. So a couple of guys, Guy Wood saying Odyssey is good. What is your thoughts on Matic? Well, Matic has just been straight up. It's been amazing, but I wasn't in it. I have to say, I'd love to have been, but it's just phenomenal. And it came a bit out the blue. Would I get involved there now with that? I'm on the 8 hour. Absolute no-no. Do you wish you were involved before? Sure, you could wish that. But it kind of came a little bit out of nowhere. The last known HVF we had over here, and I'd let it go. Kind of there. And that was your target, and you were done. A little bit of overperformance by just a small bit. But this could be... I'm going to open this up. Time frame 8 hours is a bit too big for this. So give you a little look-see on the 2 hour time frame. We get a bit more detail. Can see if we can see some stuff. So that was another nice compression there. You could see it. and then you spat up again, little bit of a flag, and you spat up again. Done really well. It's actually a bit of a flag. It's pushing through. I just would find it pretty hard to chase in there at that height after that level of move. It's generally never served me well because you're late. I don't like being late. Don't like being late. Where's your stop? You know, your stop's going to have to be there. So that's, you're trading if this is an upside continuation or not. How high? What's your target? Are you going to get more RRR than you're risking? Because you're going to have to get in round about there. You know, for that to be interesting, you would have to be off the screen. I'm still drawing my line here to you. To be a 6 to 1 RRR. So I can't, there's no justification for why it will go 6 more units up than my stop 1 unit. So it's a hard call. But well done if you're in it. You know, well done if you're in it. And it could be a bull flag. But the second leg might not be as zippy as the first and may not go all the way. But it's not a head and shoulders. It's more like a continuation. You also watch what it does there. But I can't buy that. What about his... Oh, he's working with the developers of Doggy. Isn't he? He's working with the developers. Look at that spike for murder. That's Hitbit. That's a pure pain, by the way. Let's see if it's any better on Binance. Funny enough, this has been quite HVF compliant, though. So you can see the charts well on Doggy. And it's not too bad here. But it is having a down leg. Looks like a flag. Quite a big flag, but you might get another leg up. That falling wedge was very clear. You could have bought there. You had very, well, you have your Ziggy's first cycle. You have a complex. Usually you get inverteds or structures like that as your second. And then you got your third in there. And then you should have been ready for the upside break. Boom, you would have got that up. But you would have had half of it come back at you on the flag. But that could go back up. So you heard what I said. I was the first to say this long time ago. Think of Doggy as a shell company where the company has been sold off the bits, but they've maintained the listing and it's just a shell and other things can be reversed into it. In other words, you had a car in a parking lot and the car's gone, but you own the parking lot. Another car can be reversed in there, a different one, maybe a Rolls Royce. They have a plan for that. I referred to it as that, and now other people are making similar references now to that. And of course, he tweeted out subsequently, talking to the developers of Doggy. And they said on the other side of the line, woof. And he said, you're a good boy. And he said, don't forget to call me with your bar of silver. Yeah, I don't know what that means. Who knows? So he's talking to somebody. I didn't even know Doggy had developers. I thought it was just like, you know, it just floated out there. But anyway, so you can see what's happening. So they may well have a plan for it, but that doesn't mean go in leverage long. That doesn't mean put all your tokens in that, because that is a gamble. That is a casino gamble. And we are not endorsing casino in gambling. But it has had a great run. We'll see what happens. And it's not looking too bad, but it also depends, I think, on Bitcoin, as much as Musk won't like that, unless he's ready to jump on his Twitter and start pushing again and making statements. And eventually, his effect, if he overplays it, will become diffused and less significant. And people started calling him a bit of a shiller, a pumper and a dumper, if that's not already happening. Buy 50 pounds of Shiba and forget about it. If it does a Doggy, you're a millionaire. Yeah, so people want all the meme tokens. Well, you've got to look at the meme token that's been around for a while that has the brand. It's more, if you want to buy meme tokens, buy the current one. If you think you are going to be, all the meme tokens are going to do this, I strongly doubt it. But it might. Sell S down 5k or will it recover? Well, I'm not sure I understand that. It's below 5k by some way already. I think it depends on Bitcoin, as I've explained. So someone wants Litecoin, Bitcoin. We can have a look at Litecoin as well. So the old forky looky likeys. Yeah, it's not bad. I can see what you might have liked, and it's still a bit low and a bit flat. It's a bit low and flat, and you had previous high, which you've just surpassed. We don't like to see that. Seems like a very fat falling wedge. But this is disproportionately high compared to this guy that struggled. So, yeah. It's not convinced me. It's not convinced me yet. It might do more. It's not convinced me yet. I would play careful. I mean, let's have a look at who the big shining stars have been. Hex, dare I mention it. Some of you will lose your shit if I say that. You know, I'm afraid it's gone up. There's no denying it. 0.8 of a cent. It's at about 5 cents. Traded 6.6 cents. Made me a lot of money, and I'm staking, so it's okay. And I've got my risk off, so I'm happy, you know. At 5 now, 4.8. So who's the big? So your problem here, you see, your Ethereum isn't that much better than Bitcoin, and some of that's in the recent recovery. At the low of that hammer that I showed you on ETH will have been further down than Bitcoin. This is my key thing about leading it. It's a beta. It's a beta play on Bitcoin. It's a higher beta, meaning more skittish. In a benign environment, it will be a better performer to the upside. So even flat, mildly drifting off, nothing too scary, it will be the better play. But if it gets ugly, don't hide in ETH and think you're safe. If it gets ugly, don't hide in ETH. So Hex was up, Tether is up, the rest are all down. Litecoin's down. Definity is down. Doggy is 3 points. I mean, the least down was actually our Ripple. And guess what? We gave that to you last week. The least down. And we say it will overperform if Bitcoin doesn't go down. That is our key message. You came on, you saw the thumbnail saying, who recovers if we recover? And we are saying to you, in the event of, let's go back to that Bitcoin chart, because truly this is the key chart for me. And there are a number of possible threats, but there are also some ways that it can go up. But I am playing it super safe. It's a walkout kind of recovery that's met the 43 level. We will see. There is a falling wedge in there. Let's give it a bit more. We go the 4 hour. But that's quite a deep dip through as well. On the 4 hour, it looks like it's already probed a little bit too low. I will say to you, be cautious. My overarching feeling is we may get enough time to steal something out of the likes of Alpha and XRP. But if Bitcoin is skittish and nervous, be cautious. All collateral staying in stablecoin for me. Yes, that's where I'm at. There is real risk. What is that risk? One more time, the head and shoulder complex. And that's with the 43 neckline that I'm giving you now, which is an expansion of the head. So you've had this complex hybrid head, which is a combination of upside grind buying and dip support plunge protection, which has kind of happened. Here's your upsides on the beginning part of the head, support buying. And again here. And then you've also had, I think I almost did this better. I did a chart for the premium guys a while ago. This is when we were still looking at the 47.5, but you can see those rising wedges and the drift and then the rising wedges. This is dip buying, people getting killed. They've been trained to buy the dip, and now you have plunge protection buying after major sells, not small dips, and we've still pressed through a little bit lower and run the 43. It's not healthy. I'm going to tell you it's healthy when you could do that and we're waiting for something a little bit across there. There is a real shadow over Bitcoin. And no matter what your favorite project is, that shadow will lean hard. That shadow can and will lean hard. Good time to take some profits off and get yourself an untrackable, solid silver mobile phone where you'll just have to shout really, really loud. On that good note, I'm Francis. Thanks for popping in. Likes and shares appreciated. Catch you next time. Freebie stuff. Link below. Check your spam, by the way. Guys say, oh, I didn't get it. Check your spam. Every time we tell them, it's in the spam folder. So you're free. If you have no money, just grab the free view. Call. If you wish to become a member of our premium community, on the link below that says book a call and get yourself some silver. There's also Bullion Vault for internet silver. No deliveries required. You can accumulate there. Big breakouts there. Have a diversion FTX link. If you want to get onto the FTX exchange, we look at a lot of FTX charts here, the perps, the derived markets, as well as the spot markets. Thank you for watching. Thank you for coming on. We did it early. 825 of you and 240 likes. That means 25% of you dig the fact that this is a no ads channel with real no bullshit TA, where we tell you exactly what we think, where we really trade, exactly what we like, and you get to hear some of them for free. Sometimes a little bit after all the other folk do that have paid, but never bad. And you could have made many coins by being Ethereum long. Ethereum long for this whole period. By the way, on that point, Ethereum has absolutely met a whole bunch of targets. It is a critical and key moment as well. I sense that we could still have these bearish deflationary moments. I am playing safe. I would like you to still be around, whether you're a member of my community or not. Be very careful during this period. Better be late to the next bull a little bit. You don't need that first 5%. Then the always in king that wakes up one weekend and has the nightmare from hell when it's a spiller, a thriller, all the way from Manila and back. And you've been devastated by 40, 50%. That's just a thought. It's just me. Be smart. I don't know how much skin you got in the game. I know I'm into wealth protection as well as wealth creation. And this is a time where protection matters. On that note, I say goodbye. Thank you very much for watching, and we'll see you all later. All the best.